Hey, what's up, everybody? What's up, everybody? It's your boy Chris. It's another amazing episode of Financipation. This channel is all about making money. It's all about saving money. It's all about building generational wealth. And it's all about financially emancipating yourself from generational poverty. On this channel, everybody, I try to give you a six-figure MBA level worth of investing and financial advice for free here on YouTube. And the things that people spend hundreds of thousands of dollars to learn or whatever in grad school, I give it to you for free on this channel. Lately, I've been seeing a lot of YouTubers and financial advisors and WhatsApp people or whatever talking about whole life insurance policies. And for a variety of reasons, I don't invest in them, period. And this is one of the things that's actually kind of gotten me to a couple different heated arguments recently. So for this podcast, that's what we're going to talk about. Why I do not use whole life insurance policies and why my wife does not use them either, okay? So first and foremost, the industry pushes whole life insurance policies. And in anything, people, I'm gonna be honest with you, if the industry is telling you to do something, that's the agenda that they're telling you to do, you need to look very hard at it and figure out why is it that this is what they're telling me to do? Why is it that they are basically pushing me to do this kind of thing? So things to consider before buying life insurance to start at the beginning. I want you to consider your age. Typically speaking, younger, healthier people, they spend less money for life insurance, period. If you are going to get life insurance, I'm going to be honest with you, they're going to make you basically pee into a cup. They're going to take some of your blood or whatever. So if you have anything inside of you that you should not have, it's going to basically negatively affect your premiums. If you're very unhealthy, if you're morbidly obese, it's also going to negatively affect basically what you spend for life insurance. So those are kind of some of the things that you should think about when you're trying to pursue it, okay? And the two types of life insurance we're going to talk about today are term life insurance, which me and my wife do use, and whole life insurance, okay? So term life insurance policies, they typically last anywhere from 10 to 30 years. The idea is that you want to have your loved ones to have a financial nest egg and a financial safety net in the unfortunate event that you die. So in the event that you unfortunately pass, your family gets a lump sum tax-free account or whatever that basically is given and paid directly to whoever your beneficiaries are. So that's more or less what a term life insurance policy is, okay? And some of the pros of a term life insurance policy is that they're easy to understand, they're not very complex or whatever. And on top of that, they're also typically very, very affordable. On top of that as well, if you work out a lot like myself and you're in very good shape or whatever, typically your term life insurance policies can be very inexpensive. So for instance, I spend less than $40 a month pretty much for my term life insurance or whatever. And for that amount or whatever, you can easily get well over $500,000 to $1 million of coverage or whatever. So term life insurance policies are very efficient, they're very inexpensive, and if you're very healthy, they're actually a very good buy. And if you aspire also to be self-insured, term life insurance policies are, in my opinion, easily one of the best bangs for your buck. And I'm gonna talk to you what I mean when I say self-insured, okay? So some of the cons or whatever of term life insurance, as its name implies, it's a term. So it only lasts about 20 to 30 years or whatever. The good thing though is, once again, is that if you're self-insured, you won't need it after that 30-year period. Another issue that a lot of people have with term life insurance policies is that there's no cash value component associated with them. In other words, with a term life insurance policy, it cannot be used as an investment strategy. So for some people, that's kind of a non-starter, okay? Next, let's talk about whole life insurance policies. So whole life insurance policies are permanent, which means that they never, quote unquote, expire. As long as you pay your premium, you're always gonna have the whole life insurance policy. But essentially, you're gonna be paying that premium literally for the rest of your time here on Earth. These policies are typically, they also can come with a cash value policy that builds over time. Imagine it as being kind of like a Roth IRA to some extent, where you pay into an account and it builds in a tax efficient account over the course of your lifetime. So these policies are typically the tax efficient and they're paid out to your family in the once you die, okay? So some of the pros of a whole life insurance policy is that they don't expire. But once again, you're going to be paying to this very expensive premium for the rest of your life or whatever. Additionally, as I said earlier, unlike term life insurance policies, whole life insurance policies, they come with a cash value component or whatever that's included in the life insurance policy that earns interest in a tax efficient account over time. Some of the cons of a whole life insurance policy are as follows, okay? So with a whole life insurance policy, they are very expensive. Literally 5 to 15 times more than a similarly priced term life insurance policy. So I'll give you an example. Remember how I told you I was spending about $40 a month for a $1 million life insurance policy on myself, for a term life insurance policy on myself? If I had that same policy or whatever with a whole life insurance policy, I would be spending over $700 a month for it. Additionally, another issue that I have with whole life insurance policies is that the returns on investments are absolutely horrible. And I'll get into that later on as well, okay? So let's do a deeper dive into it. Additionally, taxes. I also want to talk about this. A lot of YouTubers or whatever, they talk about whole life insurance policies, and they say things like, basically pay me money and it will teach you basically how to never pay taxes again if you have a whole life insurance policy. I'm gonna be real with you people. If anybody is telling you that basically to pay them or whatever so that they can teach you the secrets to never pay taxes again, this is what I want you to do, okay? I want you to save all the money that you have, because when the IRS audits you, you're gonna need a very good lawyer. So ignore people that say that kind of stuff, okay? Because they're lying to you. Yes, there is a tax efficient investment account that you get with whole life insurance policies or whatever. But as I said earlier, they are absolutely lousy compared to the other investments that you can do with your money. Next, whole life insurance policies, as I said earlier, they are very, very expensive. Once again, they are on average 5 to 15 times more expensive than a term life insurance policy. If I spend $38 a month for a 30-year term life insurance policy or whatever, that gives me a $1 million in the event that I pass. If I had a similar whole life insurance policy or whatever, once again, I would be spending over $700 a month for the same insurance policy, and I would be spending that $700 a month for the rest of my life. Now, let's do an example, okay? Because once again, I'm a mechanical engineer, and I like to put everything in numbers. According to NerdWallet, Policy Genius, and various other financial sources or whatever, the average whole life insurance policy only has a rate of return of about 2.75%. So for comparison's sake, the average real estate investment trust, or REIT, or low value index fund, or low cost index fund, has a rate of return of around 14% over a 15-year period. So a whole life insurance policy has a rate of return of 2.75%. A REIT or a low cost index fund has a rate of return of over 14%. So let's run the numbers, okay? Imagine you spend $500 a month on a $1 million whole life insurance policy for 40 years, and on average gives you an interest of only 2.75%. That means 40 years later, your family, when you die, will get around $450,000 from that investment or whatever that you basically paid your money into. And on top of it, they also get the $1 million insurance policy, which means that when you die, they will get $1.5 million. So you spent $500,000. So you spent $500 per month for 40 years. And when you die, your family gets $1.5 million. Doesn't sound like too bad of a deal until you look at it a lot deeper, okay? Let's say you take that same, let's say instead of doing that, you basically get a term life insurance policy. Now imagine this, instead of spending $500 a month, you only spend $50 a month basically for your term life insurance policy. And let's say basically, because you have a extra $450 a month every month to spend, that you instead invest that money into a good REIT or into a good low cost index fund. If you die at 60 after having invested that $450 every month into a good low cost index fund or whatever, by time you die, your family would have over $10.5 million waiting for you. Going with a term life insurance policy and investing the same amount of money, that $500 more or less, over that 40-year period would net you over $9 million more by going with a term life insurance policy instead of going with a whole life insurance policy. So I want you to tell me this: which one is better? Let's keep it moving. Let's keep it moving. Oh yeah, by the way, everybody, please hit that notification button. It helps the algorithm. And I thoroughly enjoy giving you guys free content. Please like, please comment, please subscribe, and definitely helps the channel grow, okay? All right, so let's keep it moving. Let's keep it moving. Commissions, fees, and service costs. One reason that whole life insurance policies are so expensive, once again, over $700 a month versus me spending $40 a month, is because with whole life insurance policies or whatever, you have to pay fees, commissions, and bills to the agents that essentially run these things. Secondly, the first years that you basically are spending these exorbitant costs, they don't even actually go towards your tax efficient cash value policies. They go toward paying the investment agents and the insurance agents who basically run these things. So once again, this cash efficient account that you think you're paying into, you're not actually paying into it. It's going to the companies and the agents that manage them. The next thing I want to talk about and why I don't particularly like whole life insurance policies is because canceling them is a pain. If you have a term life insurance policy, it's very simple. Don't pay it 4 or 5 months in a row and the policy gets canceled immediately. They won't even basically tell you we're canceling the policy. They'll say, okay, you're not paying your money, we're just gonna cancel your policy. If you have a whole life insurance policy, however, because you're typically paying into some kind of investment strategy or whatever, in order to cancel that thing, there are fees that come with it, there's penalties that come with it, and you also get taxed on it. So canceling whole life insurance policies are also somewhat of an issue. And the last reason why I say, in my opinion, you absolutely should not ever go with a whole life insurance policy, and you should instead go with a term life insurance policy, is this: there is absolutely no need for you to have a permanent life insurance policy. And the reason is simple: you need to self-insure yourself, period. So I believe that people basically have hope, and there's a vision that you should look towards, okay? So I'll say it to you like this. Let's say you're 21 years old, and let's say you get a term life insurance policy. So let's say when you turn 50, after you've basically been investing for 29 years, you have $5 million in your retirement accounts. You have over $200,000 saved in your bank account. Your houses are paid for. Your children's college funds are paid for. You have 3 or 4 rental properties every month that are bringing you over $5,000 cash or whatever. Your side hustles, let's say, are also bringing in well over $1,000 a month. Basically, people, at that point, you have essentially become self-insured. As a result, there is no reason why you should still be paying, at 51 years old in this example, $500 a month, basically, in some whole life insurance policy that's essentially taking your money. There is no permanent need for life insurance. That is the reason why I am a firm believer in term life insurance policies instead of whole life insurance policies. And they're also, to be honest with you, that is also the reason why the industry pushes the lie that you need a permanent need for life insurance. Because in the event that people start realizing we don't need permanent life insurance, we only need life insurance for the 20 or 30 years that we're basically still building ourselves up, the industry itself is going to be pissed. So in closing, everybody, I'll say it to you like this. Once again, whole life insurance policies are absolutely horrible long-term investments. The rate of return on a whole life insurance policy is absolutely terrible when compared to the rate of returns on a real estate investment trust or a low-cost index fund. At 50 years old, people, you should have planned your life and invested your money accordingly so that you are self-insured. And as I said earlier, everybody, there is no permanent need for life insurance. The industry pushes whole life insurance policy because it pays their commissions and it pays their kids' college funds. But for you, it is an absolutely lousy investment. And I'm telling you right now, I wouldn't fool around with it. All right, guys, with that, once again, it's your boy, Chris. I thoroughly enjoy giving you guys free content. So please like, please comment, please subscribe. This channel, Financipation, is all about building generational wealth. It's all about financially emancipating yourself from generational poverty, okay? Please follow me on Instagram at @thereal_Financipation. You can follow me on my Facebook page, Financipation, and check out some of my digital, my e-products below as well, okay? I have a financial blog that's gonna be coming out soon. And also on top of that, everybody, if you wanna book a session with me or whatever, so we can kind of go over finance and some other stuff, the link is below, okay? With that, everybody, it's your boy, Chris. I'm out. Take care, everybody. Peace.